Good morning, everyone. Welcome to the R&D Reinvented webinar. We're just going to give it another minute or two to wait for a few more people to join, and then we will get going. Right, I think we'll get started now. So thank you very much to everyone for joining today. This is a webinar about R&D Reinvented. I'm Ben Chernoff, a partner at Gravita, and also heading up the Gravita technology sector. Our speakers, Kate and Pierce, will introduce themselves shortly. They're part of our fantastic R&D team at Gravita, who have got years and years of experience, and they're going to take us through today all of the changes, some negative, some positive, but they're going to take us through kind of what is going on in the R&D world at the moment. There's a lot of people on this call, which is not surprising because there's a lot going on. I'm delighted to welcome you all today. There's some of our clients and also quite a few people in here who aren't our clients and don't know us yet. So just to give everyone a bit of a background about who we are at Gravita. So we're a top 30 accountancy firm covering kind of your full accountancy services, and we've got a team of around 450 now. We're also a member of the DFK International, which is a large global organisation, and therefore we kind of can assist clients on a worldwide scale. So as well as our leading R&D team, like I said, we support all other services, whether that's auditing, outsourcing, and we've got a fantastic tax team that covers all of your tax services as well. We're trying to put on more and more webinars. We've also got another one at the end of November, which is one of our tax partners, Toby, and this is to do with kind of how to be tax efficient from starting a business all the way up to exit. This webinar will be recorded, and after the webinar, if anyone's not been able to join or you'd like to kind of send it on to anyone, we'll be happy to share the slides and also the recording. So please enjoy the webinar. There's a lot to cover because there is a lot of changes. And if anyone has any questions, please put them in the Q&A, and we do have some time at the end where we'll try and run through everyone's questions. So over to Kate and Pierce to introduce themselves.
Yep, thanks, Ben, for the introduction. So my name's Kate. I'm the Corporate Tax Director at Gravita. I joined Gravita in September 21. I've got a particular specialism in R&D, and previous to joining Gravita, I spent about 6 years in the R&D regime, dealing with R&D claims and all aspects of R&D.
And just to follow on, I'm Piers and I'm the Associate Director here at Gravita. I've been at the firm for about 2.5 years and was previously specialised in R&D prior to Gravita, and I just continued that throughout my time here. So I look forward to delving into all the changes with you guys and hopefully sharing some important information with you.
Thanks, Piers. So just what we're going to be covering in this webinar. So there's really 3 main areas that we're going to be covering. The first area is quite significant. It's addressing all the various changes that have been brought into the scheme. The changes are obviously relevant to all companies in the R&D regime, not just those software and technology companies. And obviously it's going to be relevant to anybody considering making an R&D claim. The second area is how to manage this new reporting system that we've got, what must be done, what it involves, and also how does it impact your business. The third is to actually look at the specific application of the changes to the software and technology industry, or what things to look out for and how to best navigate the changes.
Perfect. So to kickstart us off, one of the things that we'll look at to begin with is obviously the spring budget changes that have got announced earlier on this year. And I think it's during that time, quite a lot of changes were announced. And I think the key point is not only was there a large number of changes that were announced, but they sort of become live and take effect at different times. So although they were all announced sort of in one big go, they do come into play at different times. And we'll sort of delve into all of these in a little bit more detail. But just to give you a summary of what we'll be covering in terms of these budget changes, it will be sort of as follows. So we'll be taking a look at the rate changes. Anyone who's involved in the R&D space may be aware about the SME and RDEC schemes that are about. Rate changes have been sort of announced and have taken effect for both schemes, and it does affect expenditure incurred from the 1st of April 23. So there'll be some companies where this will start impacting them depending on what claim they're on, if they're already claiming. And some of them might be wrapping up sort of their last claims before these rate changes start to happen. The other area that we'll be covering is the additional information form. So this became live sort of on the 8th of August, and it's basically a new piece of compliance now that, you know, companies need to adhere to for all claims now moving forward. As I'm saying, it came into effect on the 8th of August. The next two areas that we'll be taking a look at, these ones are a little bit further off into the distance because they take effect for accounting periods starting on or after April 23. So for a lot of companies, it'll be a little off into the distance, but the two areas is a pre-notification form, and this is sort of letting HMRC know in advance that you plan on making an R&D claim. And the second area is extending the qualifying expenditure criteria, and ultimately some clarity was given on a couple of areas of the R&D scheme, which I'm happy is quite a positive change that's crept in. Finally, in regard to the budget change, the final bit that we'll touch upon is this concept that was introduced on refocusing the R&D relief for innovation specifically in the UK. And it was actually due to come into effect from April 23, but it's been pushed back to April 24, and we'll delve into that in a bit more detail further on.
So yeah, just to go into a bit of more detail in terms of those points that Piers has just mentioned. So rate changes probably comes as no surprise to us all that HMRC have brought in these rate changes. And the rate changes obviously are applicable to both the RDEC and the SME scheme. A really important point is to note is when are the rate changes applicable. So in this case, they're applicable from expenditure that's been incurred from April 23. And I specifically raised that point because some of the later changes that we cover are actually relevant to the accounting period. So that's an important point. The RDEC rate, that's been quite a significant increase. It was previously at 13%. It's gone up to 20%. It's been the largest increase in the RDEC rate since the RDEC scheme was brought in 2013. To just briefly remind you, I won't go into all the detail, but the RDEC scheme is in reference to the research and development expenditure credit. And it's basically applicable to companies that don't fall into the SME scheme. And there could be a variety of reasons why a company doesn't fall into the SME scheme. The main ones are due to the size of the company, or if it's in a group, receipt of grants, for example. The SME scheme rate has decreased. Again, another significant change. The last time it was changed was, I believe, in 2015, when the rate was increased from 125 to 130%. And it's been at that rate for the past 8 years or so. So what does that mean, you know, to those making claims? How does it affect you? Well, it has an effect on the effective rate of tax. Now, the example here is it shows a decrease in the effective rate of tax or the tax benefit to companies. That example, 33%, is for a loss-making company. If the company is actually profitable, then the effective rate of tax saving, I think it was about just under 25%. So that's now reduced to 21% if it's profitable, or if it's a loss-making company, then it's reduced to about 18.6%. There is a caveat to that. There's this new concept that's known as the high intensity threshold. That we'll delve into a little bit later in some later slides. In terms of the effective rate of saving for the RDIC scheme, that's actually increased from 10.5% to 15%. You'll note the difference between the actual rates set by HMRC, which, as I just mentioned, were previously 13, now 20. And the difference is because the RDIC is a research and development expenditure credit, and it's actually a taxable credit. So that credit has to be taxed somewhere, and it's normally via an adjustment to the tax computation. It also it obviously depends on whether that RDIC credit has already been included in the company's accounts and is taxed in that way. So generally speaking, the SME scheme is still the more lucrative scheme. However, there's less of a gap between the two schemes because of the increase in the RDIC rate and the reduction in the SME rate. They've become a little bit closer in terms of tax saving. And really, this all stems towards a potential movement towards a single scheme. And again, we'll cover that in more detail later. So just to summarise the position. So obviously, the table summarises the position. How do you deal with this practically? So obviously, not all companies have accounting periods that fall exactly in line with the fiscal year. And so we've got an example at the bottom of the slide here. So a company with an accounting period ended December 22, all of the expenditure will fall into the old rates. There's a little bit of a bit more complex if the company's accounting period straddles the rate change. So in this example, we've got a company accounting period straddling the rate change. It's December 23. So dealing with that practically, you would apportion the expenditure into notional accounting periods. So part of the expenditure would be falling under the new rates, 3 months worth, and 9 months, the old rates, and 9 months worth of the expenditure would be falling into the new rates. For an accounting period that's ending December 24, all of the expenditure would be subject to the new rates.
Perfect. So just to continue on that theme of discussing the rate changes, obviously, as you saw on the previous slide, depending on what scheme you're familiar with or if you're already claiming what scheme you might be under, generally speaking, most companies fall under the SME scheme. So as you probably saw on the previous slide, that, it's quite damning, in terms of the rate changes that have been announced, it's quite a heavy decrease. Alternatively, if you are on the RDET scheme, you are looking at quite a nice increase. And as Kate mentioned, it's slowly in an alignment between the rates. Obviously, Kate mentioned this concept of the high intensity threshold, and probably to make clear off the bat is this is applicable for the SME scheme in particular. And ultimately, what we believe has been considered is the fact that due to these rate changes being quite substantial, particularly on the SME scheme, in sort of a negative light, I think, consideration was made to the impact that it could have on companies that tend to be loss-making and do a lot of work undertaking R&D, and as such, moving forward, they could feel, a little bit shortchanged. So this concept of the high intensity threshold was introduced, which is ultimately, in a nutshell, if a company can sort of outline and justify that 40% of their company's total expenditure relates to qualifying R&D, then if they would like to do a surrender for a credit, as you saw in the previous slide, instead of surrendering at the new rate of 10%, you'd still be able to get it at 14.5%. So it's slightly more generous. Unfortunately, it doesn't appear that the enhancement rate for the SME scheme will revert back to the old rate, but you do get the previous surrender rate to aid you. So when we delve into a little bit more detail on, what exactly do we mean by the total expenditure that relates to the company in the period? And ultimately, in what's sort of been presented today is it will be sort of the expenditure in the company's P&L adjusted for any sort of capitalized software costs that might have been put on the balance sheet, and also adjusted for any disallowable tax items as well. That's how the company's expenditure will be calculated. And obviously, the R&D expenditure will be, per going through a normal claim and seeing whether that 40% threshold has been met. And I believe it was important for just to raise that about the total expenditure, because we know that particularly within the software and technology space, quite a lot of companies like to capitalize some of their software development costs on the balance sheet, which is, reasonably quite a common thing to do. So this concept of the total expenditure, it does factor that into its calculation. The key point to note about this high intensity threshold is although it got announced in the spring budget, it doesn't actually become live just yet, and it won't be live until it's formally legislated for. So until it's legislated, it can't be used to date. So it's quite an interesting one that we've heard about it. We've sort of got an idea of its concept and how it's intended to behave, but we just can't use it just yet. So for companies that are sort of going through limbo where, they're being affected by the new rates potentially, what are the options available in regard to this high intensity threshold? And the two options that are generally available to companies right now is they could proceed with their R&D claim per normal, not utilizing the high intensity threshold, so they can still obtain some benefit right now. Obviously, clearly beneficial if you're a company, who's looking to increase their cash flow in the short term potentially. And then when this high intensity threshold does get legislated for, with your agent, you can then take a look at, do you meet this high intensity threshold? And if you do, perhaps considering amending that claim that you submitted to get that additional bit of benefit that you couldn't have attained previously. The other option, which I appreciate is a little bit more, lucrative if you're able to do so, is to simply hold off proceeding with your claim until it is legislated for, and then just proceeding with the claim per usual. So those are sort of, the two early options available to companies in this high intensity threshold. But that should hopefully give you an idea of the purpose of this, what it's designed for, but more importantly, the fact that, it hasn't quite become live just yet, but we're anticipating it to. I believe it's anticipated to come in perhaps in the Finance Bill 2024. So it's something that's upcoming.
Yeah, thanks, Piers. So it's probably fair to say that one of the biggest compliance burden in respect to the R&D scheme has been with regard to this introduction of the additional information form. The last time there was sort of some compliance requirements being brought in was in April 21, when the Revenue brought in the supplementary page to the corporation tax return form, which is the CT600L page. So this additional information form is a huge administrative burden for a lot of companies. It was scheduled to go live on the 1st of August 2023, but it was actually postponed to, and it became live on the 8th of August 23. Affects any R&D application. We've said from August 23, obviously we're now in September, but any R&D application that is submitted now must do this, must submit this additional information form. Yes, it replaces the traditional R&D technical report, although when I was on a recent call with the Revenue, I believe they did still say that, yes, you can still submit the report with the return. The main point to note is that the additional information form has got to be done. What is the format of the additional information form? Well, it's no surprise to us that a lot of the content of that additional information form is the same. And the content being describing why the company qualifies for the R&D regime, in particular going into detail about the company's projects that it is undertaken that qualify under the R&D regime. So that's detailing the advance, detailing what the technological or scientific uncertainties are, what work was done to resolve those uncertainties, and what's the industry baseline, how are you comparing it with what's already out there, if anything. Yeah, it's a big form. There's a lot required, so it's come to us for support with it. We're here to support with it. As I said, the form can currently be accessed via the Revenue's website. The only way to do this is to set up an account, and the form is completed online and submitted via an online portal. Emphasise again, it's got to be submitted before the tax return containing the R&D figures has been submitted. If the tax return is submitted with form, the R&D claim is treated by the revenue as being invalid. It's been recently reported that of all of the claims, R&D claims submitted in the period 8th of August to 3rd of September, almost half of those claims did not have the valid form submitted. And the revenue will be writing to those companies and agents to say that the claim's not valid, and also to basically tell them to submit the additional information form. It's really important that it's completed, that everybody is aware of it, especially crucial if you're coming up to a deadline, you know, the company's accounting period, and you've only got a certain amount of time to get that in, and that's got to be done before the tax return's being submitted. So, you know, it is more complex. Sorry, I should have covered the additional details on it. So as well as given details of the project advance and the uncertainties, there's also some extra requirements that are needed on the form. So, for example, the form requires the company to detail what the company's VAT registration number is. It also requires details of the PAYE reference, and anybody that's been involved in that claim it needs to be detailed down on the form. So who's been involved in the claim, the senior officer of the company that is signing off the claim also needs to be detailed on that form. So I can't stress the importance of completing the additional information form, getting the form right, getting it correct. There's in terms of the actual financials, companies are required to split out the financials in accordance with each project as well. So there's more granular detail required, which probably isn't surprising in terms of the recent climate in terms of R&D. You know, come to us, we're here to support. You know, we can help you get this done and submitted and get it right.
Perfect. Perfect. Sorry, I can pick this one up. So extending the qualifying criteria. So one of the positive changes that was announced, and I know that we're specifically talking about software and technology companies in particular, and I'm very happy about this one because this one will have a positive effect for these companies in particular. So extending the qualifying criteria, it came in two formats, two things that they've done in terms of extending the qualifying criteria. The first thing was the concept of cloud computing costs now being allowable. And the second point is the concept of pure mathematics activities, particularly surrounded by that, also now being allowable. So to touch upon the cloud computing cost element in particular, historically, if I'm being honest, it's been an area of the legislation that hasn't been crystal clear, and over time, people have basically got different interpretations of it. You know, the legislation was vague. Taxpayers, companies, agents adopted one view, HMRC adopted another view. Although we always know it was interesting that, you know, for software and technology companies, if you do operate in this space, and we do know that your cloud computing costs tend to be some of your largest software costs that you incur, you know, from testing environments, etc. So it does affect accounting period starting on or after April 23. So it is something that hasn't come in, you know, just yet for some companies, but will for others. And ultimately, what it includes is as I mentioned, it does include things like, you know, cost for data sets, cost for cloud computing, and those sorts of things. I will caveat and say that these software costs do need to be done in direct activities and not indirect activities, and it's sort of a niche point part of that. But just to summarize is, you know, if you had a server particularly set up directly for testing environments for your R&D, then that would likely be allowable. In contrast, if you had a server set up that was part for business use, part for a little bit of R&D, and it was sort of a mix, then it likely wouldn't be allowable. But it's been a real shift and a real change, and I know it's been categorized as extending the qualifying criteria, but personally I see it as, you know, clarifying ideally what a lot of us felt should have been allowable to begin with. And it's not on the slide that I can see in front of me right now, but I will touch upon the concept of pure mathematics being included as well. So pure mathematics is an interesting one because it only really started causing issues in the odd investigation being undertaken by HMRC into R&D claims, particularly with software and technology. And what we were finding is the whole idea of software and technology advances. We're finding that some of the arguments that HMRC were putting forward is they were basically linking some of these advances and saying, actually, these aren't advances in software and technology, but pure mathematics. And that become quite grey and a difficult sticking point with HMRC, because as you can imagine, you know, whilst software and technology certainly has its own space, we fully appreciate, and so does everyone, that it does actually have its roots in certain areas in mathematics, you know, particularly if you're a software and technology company dealing with, you know, AI modeling or anything like that, you know, you tend to find that it has some overlap with mathematics. And unfortunately, the R&D legislation didn't specifically define in detail what pure mathematics meant. And so it was, again, similar to software costs and cloud computing. It was a grey area that the legislation didn't overly define. And because of that, diverging, you know, opinions and were sort of raised. So again, pleased to say that it's been cleared up. It was something that was raised to the government, and it looks like it, you know, it's a real positive change moving forward. But the key point to note is it only affects accounting periods starting from April 23 onwards. So if you're looking at completing claims before that, it's something to keep in mind that, you know, there is a risk right now, particularly claiming those costs in HMRC's interpretation of the current guidance.
Thanks, Piers. Apologies, the slides seem to be a bit out of order. So coming on to, we should have touched upon this before, but coming on to it now so we don't miss it out because it's really important. Claim notification form. Yeah, I think this has been confused with the additional information form. It's a completely separate compliance requirement. So just to make that really clear, it's applicable to companies that are claiming for the first time, but also if your claim was made, if you've been in the scheme but your claim was made more than 3 years before the last date of the claim notification, then it's required as well. So you know, those companies who have a legacy of claiming R&D tax credits year on year are not likely to be affected by this. To be clear on its introduction, it affects accounting periods starting on or after 1st of April 23. It's a form that must be sent to HMRC to inform them of an upcoming R&D claim. Form details are similar to the additional information form, but it's a very high level summary instead. The additional information form, as I think you'll all note, has got a lot of detail in it. So this is a high level summary. So it's basically an abbreviated additional information form. So the time limit to inform, there's a time limit that's really important for especially new entrants to the scheme. It's the time limit to inform HMRC of an upcoming R&D claim is 6 months from the end of the year end. It's therefore, the time limit's therefore adjusted for shortened or extended accounting period.
Right, we've just had a question
so that's
in.
Another important compliance requirement.
Just had a question come in about the pre-notification forms. Will Gravita be managing this for their clients? So as we're talking about it now.
Yes, absolutely. That's something that for new entrants and anybody new to the scheme, you know, we will handle as part of the R&D, you know, claim.
Perfect.
Ultimately, if that notification form isn't done, then you're not going to be able to make a claim.
Yeah, brilliant. Thank you for everyone who is sending in the questions. We will try to get to them all at the end of the webinar. Please do keep sending them in, and thank you very much.
Okay, moving on. So yeah, I think Piers has already covered that extending qualifying criteria. So yes, Piers, over to you.
Yeah, perfect. So as mentioned from the beginning, one of the changes that was delayed, that was scheduled to come in for accounting periods April 23, has been postponed by a year, is this concept of refocusing relief towards the UK. And it's something that there was murmurs always going about it for probably the last couple of years about this idea that, you know, the UK R&D scheme particularly is very, very highly lucrative, And it was the opinion of some that quite a lot of the economic benefit arising from the R&D scheme was, leaking out of the UK, and it wasn't being contained so well. So, conversations started about mechanisms and ways that the R&D scheme could be adjusted and updated to, encourage economic growth specifically as much as possible here in the UK. So the refocusing relief towards the UK in particular, if anyone's got any experience going through R&D claims, you'll know that there's certain qualifying categories of cost that you're able to claim. Two of those in particular are going to be affected by this concept of refocusing the relief towards the UK, and that is externally provided workers and subcontractors. So what's been identified is some companies have adopted a business model where they've got minimal internal employees and they utilize a lot of subcontractors. And it's the concept of, utilizing overseas subcontractors to undertake the R&D on the company's behalf. And what HMRC are basically trying to encourage companies to do is, look, instead of subcontracting it out, instead of taking it abroad, we know that you've got a company presence here in the UK, but you're taking a lot of your R&D abroad. Can we encourage you, via the R&D tax relief scheme to bring it back here to the UK? So as part of this refocus, and unfortunately it is a little bit sad, but at some point when this does become effective from accounting period April next year, overseas subcontractor costs and externally provided worker costs will no longer be allowable. I was going to say at all, but generally speaking, they're not allowable except for if a company is able to demonstrate that a certain subcontractor externally provided worker cost meets the qualifying overseas expenditure criteria. And ultimately what this niche bit of criteria is sort of aiming towards is to encourage, is to basically sit there and go, we'll allow you to claim overseas expenditure on the condition that there's certain factors in place that prevent you from undertaking it here in the UK. And it's very restrictive on what it allows. One of the prime examples that we've seen a lot given, for the UK and what this means is things like, deep sea ocean research, where quite frankly, the environment here in the UK isn't, geared up for certain activities. Therefore, companies have no option but to take it abroad, or whether there's sort of regulatory issues, that prevent certain R&D activities that can be done elsewhere. One of the things that has been raised is the concept of it being a little bit more, if you're an entity who's subcontracting abroad and you're doing it for, financial efficiency reasons, then it's highly unlikely that will be deemed an acceptable reason to have taken your R&D abroad and subcontracted it out abroad. So just to keep that in mind, that it's they're drawing quite a hard line on overseas subcontracting, moving forward. And so hopefully this might switch a few light bulbs on and start getting people thinking about things that they can do moving forward, in terms of keeping in mind the R&D relief. And generally speaking, there's a couple of options available to companies, and a lot of them seem quite straightforward and simple in terms of their concept. But the first one is to bring as much of your R&D activity in-house as much as possible, which is what ultimately the government is trying to encourage companies to do. Instead of subcontracting abroad, is there the potential that instead you could take it on internally, bring more people in, employ more people here in the UK and do it internally? Or alternatively, could you at the very least start utilizing UK subcontractors? And again, it's all about just encouraging that economic growth and benefit here in the UK specifically. We appreciate that some companies have models where that quite simply isn't viable, to bring activity in-house or utilize UK subcontractors for one reason or another. At the very least, the key thing to keep in mind at very least is at least being aware that moving forward, there might come a point where quite a lot of your R&D claim might no longer be allowable if the bulk of it is externally subcontract and externally provided worker costs overseas. And to at least start, if you're particularly keen on financial budgeting and working out income, then at the very least you can start to strategize and keep in mind that you'll have a reduced R&D claim, or maybe not even a viable one, depending on the business model that you have adopted. So that's something that, and part of us believe it was delayed on the basis that it's quite an aggressive change in the ruling. So it's more than likely part to give companies an extra amount of time to adapt this change, because as I'm saying, it's quite a big change. It's going to affect quite a large number of companies.
Thanks, Piers. Yeah, this is quite a big thing for a lot of companies at the minute. That scary letter that comes through the post, that dreaded brown envelope. Unfortunately, there has been a rapid rise in R&D investigations, and I think the effect of this was probably around summer last year. Fraud Investigation Unit got involved, and they sent out letters targeting certain type of companies, and it seems that those most at risk were those without an established PAYE scheme and VAT registration. And that's interesting, since the additional information form now requests those details. There's been a lot of problems with the revenue's handling of the R&D inquiries. They've adopted a volume approach to R&D inquiries, which has covered a widespread of companies and industries. The volume approach is a problematic one, and the COT have actually voiced concerns about the handling of inquiries. They sent a very detailed letter to the revenue in July, and the letter was quite damning. Actually, it cited examples of poor behaviour, and there was several examples listed of lack of care, poor communication, grammatical errors, technical errors. HMRC have responded. They've acknowledged that the handling of claims has failed to meet the relevant standards, the Taxpayers Charter, but they've said that there still needs to be a different approach to handling inquiries, because what's happening is legitimate claims will continue to be rejected, and also it puts people off submitting an R&D claim. So obviously it's really important that when the additional information form is submitted, that it's done in the right way, it's completed properly, and that all considerations have been made towards various technical aspects of the R&D scheme, and the importance of that can't be underestimated. Current rate of inquiries, I think it's possibly levelled out somewhat, but as the nature of inquiries goes, there's these inquiries always tend to take a lot of time and effort. And they do tend to rumble on for quite a few months, and it's especially difficult when you've got the revenue. You don't know who you're responding to. A lot of the letters that are coming across from the revenue don't actually have any contact details, a caseworker, so you don't even know who you're dealing with often, and they tend to be sat on somebody's desk, and the next person that comes across that letter is not necessarily the same person that's already been involved in that inquiry. So lots of issues. We could spend a lot of time, addressing the HMRC inquiries, but I think it's just important to be aware of the current climate in this regard. So yeah, over to you, Piers.
Yeah, so I guess just leading on from the point about, HMRC's opinion, their increase in scrutiny, their increase in investigation rates, obviously, how does it specifically impact technology companies specifically? So as Kate already touched on, there is an increased scrutiny across the board. However, what we've particularly seen is, in terms of the rate and inquiry and the proportion of them, the vast bulk of them that we've noted are software claims in particular. And we believe that there's a couple of reasons of this. Firstly, the vast bulk of most practices' portfolio of claims and clients that they work with do tend to be in the software and technology space in general by default. In software and technology, I think, anyone who's operated in the space knows how quickly that industry progresses, how new advancements are made, and all of these sorts of things. So it's a rapidly evolving industry. So generally speaking, more volume of R&D claims that go in of the software nature, and the output has sort of been in this increase in scrutiny environment, is quite a lot of them have been software and technology based claims that HMRC are looking at. So it could, one theory is obviously general volume and population of those types of claims going in. Another one that we believe happened was, and yeah, just to expand on Kate's point, was, summertime last year, HMRC got concerned about fraudulent submissions being made, and what they actually did at the time was HMRC ceased processing claims for about a 6-week period. So that meant that, any claims that had been submitted weren't being processed. There were severe delays in payouts whilst HMRC undertook this internal investigation process. What became an unfortunate conclusion of that internal investigation process is HMRC did identify, fraudulent companies and fraudulent claims being submitted, which is basically, people just trying to extort as much money as possible by submitting, you know, false R&D claims. One of the theories that have gone around, I haven't seen it formally confirmed anywhere, but we believe that, you know, those fraudulent, or a bulk of those fraudulent claims that were made, were actually, you know, fraudulent software claims that were made. And the reason for that is quite simple. You know, if you're a criminal looking to do bad things, you know, the easiest thing for you to do is to set up a software company, because everything is intangible. You know, you don't need to worry about overheads, manufacturing. You know, your R&D being software and technologies, it tends to be intangible in nature. So when it comes to, you know, dealing with HMRC, improving R&D, you know, software tends to be very, very intangible in of itself. So we just unfortunately believe that it was just, you know, an easy industry, if you like, for bad people to unfortunately exploit the scheme. So this is sort of taken effect on, you know, HMRC's view, their increase in scrutiny, their view on software claims. And as Kate said, fortunately, it seems like the part of this year that the rate of investigations has started to peter out a little bit. It seems that HMRC in particular had a 6, 7, 8, 9 month window in particular where it seemed like, you know, new investigations were being opened every day. And now we're sort of going through the process, as many others are, of looking to go through these investigations, and new ones aren't as frequently being opened. It doesn't appear that way. So, but just to give you a bit of flavour of what sort of happened in the last year, and in particular how this relates to software and technology-based claims specifically.
So just to go into a bit more detail on what we see as the common weaknesses and issues in technology claims. So lack of technological detail. It's important that the report highlights what technological advances and uncertainties are, stating that no off-the-shelf solution exists without providing underlying technological uncertainties may lead to revenue to interpret the claim as a non-advance in the industry. So it's important to get that right. Providing specific details about technological limitations and challenges is also really important. Overemphasis on functionality. It's important to rather than excessively emphasising or describing product functionalities, to highlight the underlying technological advance and challenges that are there. It's important to also obviously showcase the work that's undertaken to overcome these challenges. Custom coding expectations, assuming that custom coding automatically qualifies under the scheme, I think is a common misconception. Customization alone doesn't make an activity eligible, so it's important to demonstrate that technological uncertainty and advances are involved in the project. UX and UI activities, so claiming solely based on a unique aesthetic in user experience or user interface design is insufficient. BIS guidelines actually state that the qualifying work must involve technological uncertainties and advances. So whilst front-end work, there could be a chance that it may qualify, there's a lower chance it may qualify, and it tends to be the back-end work that is more likely to be eligible. Hosting and data costs, we've obviously already touched upon the changes in the scheme that are coming in terms of qualifying costs. We know that the revenue just don't simply, like up until those changes, they just don't simply agree with the fact that this is eligible costs. So it's important to be aware of HMRC's view on these costs and not include them, at least prior to the changes to the scheme.
Great. So I guess moving on to the slightly more positive aspects of some of these changes. I know we've spoken, a lot of it seems reasonably quite negative, but I think generally speaking, we're just looking at an increased compliance sort of time frame that we're now going through. But we've already touched upon it. So in terms of the positive changes, again, specifically for technology companies, obviously now we have the added benefit of the extension of cloud computing, which is now making it crystal clear that these types of costs are allowable under the right circumstances, as opposed to what we're dealing with sort of before, which was this grey interpretation and HMRC adopting one view and other people adopting another. I already touched upon it, but the inclusion of pure mathematics, which in and of itself, will help software and technology companies, because, HMRC, won't be able to make the point that some of the advances are in pure mathematics and not software and technology, because pure mathematics is now just being deemed allowable. Or will be, again, touching on, accounting period starting April 23. And obviously, I appreciate it will be the minority of companies who are under the RDEC scheme, but obviously the benefit there is obviously your RDEC rates are going up. Obviously, not quite so much good news if you're under the SME scheme. But to summarize, those are probably the biggest positives that are coming in for the R&D scheme, but specifically technology companies.
Thanks, Piers. And just positives always comes negatives, unfortunately. So yeah, just to summarize what we see as the challenges, be a bit more positive than negative effects. So decreased benefit from the for the SME scheme as a result of the reduction in rates, albeit those that are in the RDEC scheme increasing rates, so that's good. You can, as you'll be aware from the previous slides, is increased compliance and administrative burden. So in terms of the additional information form and also pre-notification. And restrictions on overseas subcontractors, which are effective from April 24. So those are the things that we need to watch out for.
Perfect. So throughout obviously the presentation, there's been some nudges towards, some mentions of this transition to a single scheme. And again, this is something that's been ongoing for quite a long while. And ultimately, the perspective that some people are coming from is obviously anyone involved in the space knows that there's an SME and RDEC scheme. And depending on the company's size, amongst other things, sort of, grant funding or having their R&D subsidized, it could affect what scheme you fell under. And traditionally speaking, the SME scheme was always more lucrative than the RDEC scheme, with the general mindset being that traditionally the SME scheme is for smaller companies, RDEC is for larger companies. The government in particular always wanted to give more benefit to, the smaller up and coming companies to help those in their R&D endeavors specifically. So the transition to a single scheme basically opts to, abolish, if you like, the SME and RDEC scheme and just bring in one scheme. So it doesn't matter, the size of the company or anything like that. There will just be one scheme moving forward. That's what's being proposed. There was a consultation near the start of this year. And so plans have started to be put in place in terms of draft proposals on what this single scheme could look like. We won't delve into it in too much nitty-gritty detail simply because it hasn't formally been announced. So it's something that has been proposed. It started to be drafted, but as of right now, the government haven't actually confirmed that, yes, this is something that we're definitely going to implement, and here's the date we're implementing it. It's something that is being sort of worked on in the background and could come into effect. As you probably gauge by the rate changes, you're inherently seeing an alignment of the SME and RDEC rates. So personally speaking, myself and I know others in the space, I think we're adopting the view of it's not of a case of if this single scheme comes in, but more of a case of when it comes in. And just to give you a bit of high-level detail about this scheme specifically, as you can imagine, some of the proposals, what they've ultimately done, if they've basically taken some elements from the SME scheme and some elements of the RDEC scheme and have sort of put it together into one scheme. As you can imagine, by doing something like this, this single scheme won't be as lucrative as the SME scheme traditionally was, but vice versa, it also, will be more lucrative than the RDEC scheme. So it will be something that sits somewhere in the middle. To give you a high-level example of what's sort of been pinched and been discussed, I'll focus on two areas. You've got the subcontracting element and the subsidized expenditure element. So I'm happy to say that it looks like what's been proposed regarding subcontracting is it looks like it will be sort of the guidance from the SME scheme that is being proposed to be adopted. The SME scheme and subcontract costs is more generous than what you get under the RDEC scheme traditionally. Under the RDEC scheme, unless your subcontractor met very specific requirements, if you were claiming under the RDEC scheme, you just couldn't claim subcontractor costs. Under the SME scheme, anyone who's familiar with knows that, generally speaking, as long as you're subcontracting out R&D, it's a bit more fluid and flexible. Subsidized expenditure, unfortunately, isn't as positive. It looks like, what's been proposed is from the RDEC scheme, which is very restrictive, which is basically, in a nutshell, if you've had your R&D subsidized, whether you've had a client finance it specifically for you, or you've had another company finance it, however it might have been subsidized, it looks like that expenditure just cannot be claimed. Under the SME scheme, it was slightly more flexible. You couldn't claim under the SME scheme with subsidized expenditure. You then got moved on to the RDEC scheme, which wasn't as lucrative, but at least you got something. What's been proposed now is quite simply it just won't be allowable. So as you can see, some positives and some negatives. So yeah, as I'll just touch on here, as I've already said, it is something that is going to be considered and mentioned later on. And just to also touch on some of the other changes and how it will be incorporated, the idea of the R&D intensive threshold that we previously mentioned, that will likely, if it does come into play, run alongside this single scheme. And also regarding the changes to subcontractors and overseas subcontracting costs, that will likely form part of the subcontracting guidance under this single scheme as well. So it won't be, the single scheme won't supersede it. It will likely be merged in with the overseas subcontracting point, taking precedence moving forward.
Brilliant. That was very, very useful. Thanks, Kate and Pierce. That was great. I know, just want to apologise to everyone. I know we've overran slightly. We do have some really good questions that have come through, so we're just going to touch upon a few of them. And just to remind everyone, we will, after the webinar, share a recording and the slides, because I think there was some really useful information and the area is becoming more and more of a minefield. So yeah, just to run through some of the questions. So can the additional information form be submitted quarterly? Pierce or Kate, if one of you want to answer that.
As far as I'm aware, there's no mechanism to submit the additional information form. I think it's just a per accounting period.
Yeah, is the easiest way to look at the additional information form for anyone who's involved in the space is the additional information form, despite its name, because it's got additional in it. The additional information form fundamentally replaces your traditional R&D report that used to be produced and attached to the tax return. So the way it works now is you wouldn't have a requirement now to produce that traditional R&D report. Instead, you would complete the additional information form and submit that electronically to HMRC before filing the tax return containing those R&D figures. So that's the best way to look at anyone involved in the space is it just replaces that traditional R&D report.
All right, brilliant. So a question here, there's 3 questions to one, but following the changes in August and the additional information, do you expect HMRC to slow down the repayment process for loss-making businesses? And linked to that, will the payout therefore increase above the 40 days that they're currently targeting? Based on your current experience, have you seen them been delayed at all?
I think there, as Piers mentioned, there were delays in the summer last year, but as far as I'm aware, we repayments have been turned around within sort of typically 4 to 6 weeks.
Yeah, I think because we're only kind of 5-6 weeks after the new forms come out, I think we haven't really seen it.
Yeah, time will tell. I mean, it's quite early days at the minute. We've submitted several additional information forms, and we've had some R&D repayments come through recently. So I think it's just a matter of time.
Yeah, and one more question that was linked to that is R&D advance funding something to solve the HMRC delays? I think on the R&D advance funding, obviously from a cash point of view, it will help a lot. I think just based on my experiences, 1, it's becoming more and more costly, and 2, with the HMRC inquiries that are being opened up a lot more than they used to, and these inquiries, the way the revenue are currently acting, can take up to 6 months, some of them, and therefore when you're budgeting what the R&D funding is going to cost you, you really need to take that into account, because I think once you start to realise what it costs, it kind of might not be worthwhile. But obviously some businesses are desperate for the cash. So just another question, again, we'll wrap up in 2 minutes. HMRC fed back from our last claim that we should have checked with the revenue first whether they were eligible before submitting. However, it's not clear if there's a process for checking with HMRC. Would we use the claim notification form, or is there another process to get assurance from HMRC?
Yeah, we've come across this. I mean, I could talk a lot about this, but to keep it brief, we've come across this quite a lot in revenue inquiries. There is no, prior to the claim notification form, there is no legal requirement to have to liaise with the revenue regarding the claim. They do have this advance assurance service, but actually, if you look at it, prior to the claim notification form, there was no legal requirement to, and that tends to be the revenue's tactic, and they do use that tactic in inquiries. So I think the answer is it's important to, yes, you can speak to the revenue before making a claim. Obviously, if you're new to the scheme, it's important that you do the pre-notification. And it's also important that you do the additional information form. But obviously, we can guide, we can guide all our existing R&D clients and new entrants through that process.
Yeah, brilliant. Thanks, Kate. Just last question before we wrap up. Have you seen a lot of claims being rejected?
As I said, we've had a number of claims. Those in terms of our inquiry rate is probably still quite low based on the volume of claims that we do. But we've had inquiries into claims that are really strong R&D claims, and it's probably because they're within an industry that the revenue don't like. We know that some industries, unfortunately, are more susceptible. I also know that the revenue I believe that the revenue have selected inquiries by SIC code. There's nothing in the legislation that says you have to fall in a certain SIC code to do an R&D claim. It's whether you're undertaking R&D that is relevant to your trade. That's the important point. But I've seen the revenue go after companies, and I've seen them mention in SIC codes, which it has no relevance. Has no relevance to the claim.
Yeah, and just to expand on that point, that the revenue, if you've got a certain amount of projects on your claim, they can accept some of them and reject some of them. It doesn't mean that it's either yes or no. It can be some get accepted, some get rejected. And also, if you get a letter from the revenue saying that they've rejected your claim, that doesn't mean that they won't change their mind. It just means based on the information provided currently, you haven't met their criteria. So that's why working with our R&D team, we will always kind of push back to the revenue, because we would only submit claims that we're comfortable with, and therefore we would always try and show them how we meet the criteria for R&D. Cool. Right, I know, once again, I know we've overrun, but really thanks to Piers and Kate. There has been a few more questions that have come through. We'll try and respond to them offline, just because I am conscious that we have overrun. Thank you to everyone that's joined today. As you can see, there's a lot going on in this area. I think we will try and do another R&D webinar soon, and maybe we can potentially touch upon some of the revenue inquiry side and some of the kind of the questions and points that we're getting from the inquiries that the revenue are opening. If you want to, please do get in contact with us if you want any assistance in this area, or any general accountancy support. And like I said, we've got another webinar at the end of November, which Toby, one of our tax partners, is leading. So thank you once again to Piers and Kate. It was a brilliant webinar, and yeah, look forward to speaking to you.
Thank you all.